to another Straight Up Tuesday tip. I'm 𝗤𝘃𝗃𝗀𝘀, licensed agent with Second City Real Estate. With me, as always, is 𝗦𝘃𝗃𝗃𝗀𝗀, founder and owner of 𝗣𝘚𝗀𝗀𝗀𝗀𝗀𝗀. And with us is, I think, the most appearances so far in Straight Up Chicago history. Perry Farella, back on the show again. We've had him on as a guest, episode 67, and on, I believe, 5 or 6 different Tuesday tips already. But we have him back again for more. Got some lending expertise to share with us. So, Perry, one of the questions we had from a listener, we wanted to share it with everybody, is talking about rate locks in a volatile environment. And the question was, when should I be looking to lock in my rate? And I know that's probably something that's a very vague answer and has a lot of dependencies, but let's talk about those nuances. So I'm going to turn it over to you to talk about how long does a rate lock usually last? When do you see clients lock in, whether it be before something's on contract or after? And what happens if the process drags out and we're going to go after that lock? The lock is going to expire. What happens then? So a bunch of jumbled questions into one, but I'm going to turn it over to you to give it a little preface, and we'll go from there.
All right, great. Thanks, Tom. Thanks, Mark. So rate locks can be a confusing subject for a lot of people, but the short answer is that we need a property to lock on. So we can generally do a rate lock when someone first goes into contract. There are some other occasions where if someone is shopping and they want to lock now and they think they're going to go into contract in the next 10 days, let's say, they can do, what's called lock and shop, where we would lock in some rate, not knowing yet what the property is. There's usually a little bit of a cost for that if you want to lock in advance. So most people don't, but it is theoretically possible to lock in advance. Most rate locks last 30 to 60 days, generally speaking, to push out a closing date. If you're doing a renovation loan, it might be 45 days to 60. If you're just doing a quick purchase, we can get them done in 30 days easily. A big question that I often have is, what if the deal falls through and they want to switch to another property, but they've locked on this one? Are rate locks transferable from one property to the next or one contract to the next before closing? And the answer is, at prime lending, they are. We determined that compliance allows us now to do that. So if you locked on a house at number 1 Main Street, but then after your inspection, you decided you didn't want it, but then another house across the street at number 3 Main Street came on, and you want that one instead, can we transfer the lock from last week that maybe had a lower rate than what we could get this week? And the answer is yes. You can now transfer locks from one contract to the next. So that was a big improvement in how locking works. In terms of the cost of locking, every lender would have a different cost to extend a rate lock. For example, if you lock for 60 days and you haven't been able to get your contractor to do the write-up so we can do an appraisal to get the ARV on a purchase, we might want to extend that lock another 10 days. So different lenders will charge different costs. Usually it's 1 basis point or 1%. Or 1.01 out of 1%. So 1 basis point or 1.5 basis points per day times the loan amount will get you your cost of your rate lock extension. Sometimes the lender might pay for that, or sometimes you get the seller to pay for it if it's the seller's fault. So you can always keep extending a rate lock forward, but sometimes it may very well cost you or even the seller some funds. And that's just the nature of rate locks in an environment where we think interest rates are going up from 1 month to the next. There's also what's called a float down option that many lenders will offer. And you can exercise that option typically one time in the process, meaning that if we lock at X rate today and a few days before closing, the rates drop dramatically, say 1/4 point, 3/8 of a point, 1/2 a point, you'd want to float down to that rate and you'd want to exercise your float down option. So you could check to see if your lender is offering a float down option to protect yourself so that you can get a lower rate if the market turns around and rates go down instead of go up. That way you're protected on getting the rate on the downside. And of course, you're protected on the upside because you locked, which is the whole point of locking, is to protect yourself from rates going up.
For the float down, what's the typical charge? Is it similar to the locking it or getting extensions? How does that work typically with most lenders?
I can only tell you at prime lending, we don't charge for that. Other lenders might, but prime lending does not.
Cool. Another question. Let's say you have a rate lock needs to be extended. You get, the seller agrees to pay for it. You extend, the deal still falls apart. Like, is anyone actually paying the lender at that point? Or is it just It is what it is. Like if you get a rate lock extension, but then the loan never actually books.
Yeah, if the loan never books and the deal never closes, then no money is owed anybody. No one can charge for anything. So all of that is kind of, in that context, it's all funny money, because if the deal falls through, the contract gets canceled, then you move on to a different property and you want to move on to a different lock, you don't want to transfer the lock, then the slate gets wiped clean and everybody starts all over again.
Got it. Good stuff. I'm assuming you're getting a lot more questions on rate locks today than you were a year ago.
Yeah, we are. We get a lot of questions about how the float down option is going to work, because everybody still holds out their hope that maybe rates will drop, and maybe they will. When economic conditions change, that wouldn't surprise me. Rates are very dependent upon economic conditions in general. So when those conditions change, mortgage rates can go up or down, certainly, as we've seen this year in a very rapid fashion. But what really the key is that you have to be comfortable with the rate that you have, meaning that if the rate this year is double what the rate was a year ago, is that still the payment that you want? So everybody kind of has to shop for their housing, not so much by the rates or even by the price of the house, but more like by the monthly payment. And can you afford that? Can you be approved for that monthly payment? So it's more of a payment kind of a situation, I think, than it is price sensitive or even rate sensitive. Payment at 3.25% is one thing, but then when that rate is now 5.5% or even 6%, that's a significantly higher payment. And so you have to be comfortable as a buyer, with that payment at that same level. And that's what we see a lot of is, what's my payment? What's my payment? And there's also the concept of an adjustable rate mortgage as well, where the rate is not fixed for 30 years. The rate may only be fixed for the first 5 or 7 or even 10 years. Some people are taking a closer look at adjustable loans now, and they haven't been looking at those in a long time because there was no point in it. The rates were typically the same with economic conditions driving the secondary market. But now there may be some benefit in considering an adjustable rate mortgage where the rate's only fixed for 5 years. And then there are some terms that dictate what happens to the rate in the 6th year through the end of the term of the mortgage. And it also depends on how often you feel like you're going to move. If this is a house that's not your forever house, I've seen a lot of people get a 10-year ARM where the rate is just simply fixed for 10 years at lower than whatever the prevailing 30-year rates are today. But that doesn't matter because that's not their 10-year house. They're not going to stay more than 10 years. So a 10-1 ARM where it's fixed for 10 years, then it would adjust every year for the next 20, yet still your payment is amortized over 30 years. A 10-1 ARM can be more attractive in times of increasing interest rates.
Yep, that makes complete sense.
Forget about it. I prefer reverse or negative amortization.
That I don't think you're going to find anywhere today.
I'm joking.
I think most of our listeners are probably too young to even remember.
Yeah. I aged myself there.
So yeah, I guess going back to the point of it's driven by payment. Someone was talking, there's like a LinkedIn argument back and forth about supply and demand, and there's still a shortage. And there's a good point someone made, but the summary was basically like, listen, people don't buy houses, banks do, right? That's the financing dictates, what is pricing going to do? So there's people demand, but you can't just look at that in a vacuum of just individuals versus houses and the shortage. Like the banking side of the equation is a huge part of that. That's largely oversimplified. So, Mark, who do we got?
We got Dennis L. We got a lot of last initials. Dennis L.
Dennis. All right, Dennis, let's do this.
I don't know where he's from either. He said Dennis L. Miscellaneous.
All right, how are we going to get this guy's money? All right, so I think on one of the previous episodes with Perry, we mentioned WGN, so let's pull on that thread here. So the Bozo Show began in 1960 with Bob Bell performing as Bozo. It added more cast over the year. Mark, I don't know what age you were, but we're about the same age. Remember, like Professor Andy, Cookie, Rusty? Yep. So the show ended production with a 90-minute primetime special in this year. So basically, what was the last year of the last Bozo recording? And your options are 1998, 2001, 2005, 2008.
I want to say 1998.
Perry, you want to take a stab?
I think I would agree. 1998.
So I would also had agreed. I would even gone earlier. 01.
Really?
Yeah, it made it that long.
All I know is I was still on the list. For those of you who don't know what that is, the list was like literally a decade long to get on there to be able to do the bonus part. Or what was it called?
Bozo Buckets.
Yeah. So Christine, who helps organize our shows, maybe she could upload the footage of her on that show when this show airs, because she went on there, I think, when she was 10 or 11. It's a great little clip she has.
Ooh, 10 or 11. That hopefully she got to at least bucket 3 or bucket 4.
I don't remember, but it's a great video to watch. So, that's awesome. Bless with the pass. All right, Perry, thank you for coming back again. And no one's even close to competing with you as far as how many times you've been here now. You must be adding value because we keep inviting you back. So, Tom, thank you as always. Listeners, if you know, we had the awesome event here a couple months ago, and we're looking for a venue to throw another event probably in the fall, early winter. So if anyone has a cool venue you think could be a great venue that's not going to break the bank, we'd love to hear any place you know. There's a lot of corners of the city that are cool that you just don't know about. So if anyone has one of those, please reach out to us, share a cool venue, maybe post it on the Facebook page, or you could email us at straightupchicagoinvestor@gmail.com. Thank you, Perry. Thank you, Tom. And listeners, we'll see you Thursday.
Thanks all.